Hello everyone, welcome to today's video. So coming to the second and the last part of lesser known income tax deductions. In the previous video we tried to cover three such income tax deductions which were not aware across multiple people. In this video we try to cover three more and help you save some more tax. Okay, so let's start this. Starting with the first one, paying rent to parents. So this is something which can act as a way to manage your taxes. Okay, so let's discuss this in detail. A taxpayer or a assessee can avail this HRA, house rent allowance exemption. Okay, but he needs to pay rent to their parents. So see, I'll explain you with a brief example. In case you stay with your parents and you are a salaried professional, okay, then there is no need to pay rent, correct? But when HRA is part of your salary package or your CTC is cost to company. So in case HRA is a component in your salary structure, then why not claim that benefit? You can claim that benefit by actually paying off rent to your parents. Okay, so that will actually require a rent agreement and rent receipts, which are mandatory, which you can submit to your company, finance department, or HR department, and get that HR deduction claimed, due to which the same will be populated in your Form 16B, which the organization will give you. So that Form 16 will actually help you create a base for lower tax or lower income calculation in the ITR filing or while ITR computation. Okay, so we have few mandatory things. One is rent agreement, rent receipts, which I already told you. Amount should be as per calculation. So that is 40%, 50%, depends on metro city, non-metro city, 10% of your base salary, and actual rent paid, whichever is lower. So it's a calculation based thing, which definitely your HR team or finance team will help you with. But that HRA component should be a part of your salary package. Then only this can be claimed as a deduction from your salary income. Coming to the next one, donations. So donations under section 80G. So these donations are basically even a charitable work that you are doing. You are helping a needy organization or needy person. So along with this good work, you even get a deduction under section 80G, which will help you save some taxes from your gross total taxable income. Okay, so this basically falls under two bucket. For few organization, few institution, few charitable committees, you'll get a deduction of 50% of the amount donated. For few, you'll get 100%. So that depends upon the qualifying limit upon the qualified institution, whatever you are giving contribution or donation to. Okay, so that donation should be given to any approved body or charitable organization. Why? Because for any such charitable organization, a separate PAN number and a approved body or charitable organization registration number is given by the income tax department, and that number is very mandatory, very much required by filing ITR return and claiming this reduction. So in case you want to claim this reduction under section 80C, you should have the registration detail, registration number of that charitable organization approved authority, and the PAN of that authority. Contribution or donation should be made through check, draft, or cash. These three modes are eligible for deduction under this section. Cash only up to a limit of 2000. Anything over and above that should be paid via check, draft, net banking. Coming to the next one, the last one, the sixth lesser known income tax deduction, that is the deduction for any purchase of electric vehicle under section 80 EEB. So this is a recently introduced tax exemption whereby a assessee or a taxpayer can even own an electric vehicle on say loan, and that for buying interest paid on loan for buying that electric vehicle can be allowed as a deduction from your gross total taxable income. So maximum of 1.5 lakh deduction is available under section 80 EEB. This deduction is over and above all of the deduction that we have discussed in past, and this definitely is a good deduction, good claim which you can make against your income, and even own a environment friendly car, which will actually help you save a lot in long run. Okay, so that 1.5 lakh deduction is definitely good for you in case you plan to own a car, that to electric vehicle. And any interest payment which you pay over and above 1 lakh 50,000, that can be claimed as a business expense. So see, in case you have some business income, okay, against that business income you can claim any interest that you pay over and above 1,50,000 as a business expense. So I'll explain you this with a brief example. So in case a total of 2 lakh as interest on the electric vehicle loan is something which you are paying in a financial year. Okay, let's assume financial year 21-22. So in this year you are actually paying an interest of 2 lakh. Now out of that 2 lakh, 1,50,000 can be claimed under section 80 EEB. The remaining 50 lakh can be claimed as a business expense against your business income. So in case you have a business income of 1 lakh for the complete financial year, then out of that 1 lakh you can actually reduce this 50,000 more and only classify the taxable business income as remaining 50,000. And over and above that, overall gross total income, on that you can claim a deduction of 1,50,000. So overall, all the interest that you'll pay can be claimed as a deduction. This is really good section. It will help you become environment friendly and even save your taxes. So in this video, we tried to cover three more lesson on income tax deduction facts. The first one was paying rent to parents, whereby you can actually have a rent agreement, rent receipts, and pay rent to parents and claim that deduction under HRA, which will be presented to you under Form 16 by our HR or Finance department of the company. This is definitely available for a salaried person only in case HRA forms a part of your CTC or salary structure. Second one is donations under Section 80G. Any donation which you give to approved body or charitable organization, that can be claimed as a deduction from your taxable income. So along with the charity, along with the good work, you'll even get a deduction. This deduction is basically split into two categories: 50% for few institution, 100% for few. And the last one is purchasing electric vehicles. So any interest paid for the loan acquired to purchase electric vehicle, that interest can be claimed as a deduction up to 1,50,000 under 80 EEB, and anything over and above that can be claimed as a deduction under business expense against your business income. So hope this series or this two videos will actually help you save more taxes apart from what you were already aware. We'll be out with such new videos soon. Till then, stay healthy, stay safe. Thanks. Bye.